All right, hello and welcome to Personal Finance Understanding Credit Cards presentation lecture. Please make sure that you have the notes that go along with the presentation lecture so that you can take notes as we progress through the Understanding Credit Card content. All right, so let's first of all start off by defining what is a credit card. A credit card is something that you may already have, maybe not. It is a plastic card that you can use to access a line of credit that has been established in advance. Now, when it comes to this, a person can borrow up to the established credit limit. So credit cards will have a limit of say maybe 5, 7, 10, 15, all up to like $30,000. And your credit limit is the maximum amount of dollars that can be borrowed at a particular time. Is a credit card open-end or closed-end credit? If you think about this for a second, the credit card is always in our possession. As long as we keep paying our bills, we can continue to use the credit card, thus making it an open-ended credit option. Now, credit cards, in order to have this open line of credit, we make purchases, and based off of those purchases and that balance that's carried on the credit card, interest is charged. This is how credit card companies are able to be profitable in order for providing us credit convenience. Interest is paid and charged each month, especially if the balance is not paid in full. And now, depending upon what you qualify for and the type of card that you apply for and get, the rate at which the interest is charged is referred to as the APR. This is the annual percentage rate. The cost of credit expressed as a yearly interest rate, but then is also going to be applied on a monthly basis. And you will see finance charges based off of your APR if you are carrying an outstanding balance on your credit card. Minimum payment, this is due each month. Every credit card company is going to indicate to you a minimum payment is due based off of the balance that the card is currently carrying. To prepare, an example of this would be to prepare for her first semester of college, Miranda purchased a new computer for $1,000 and textbooks for $500. She spent a total of $1,500 on her credit card, charged with a 15% APR on anything she purchases with her credit card. How much will Miranda pay in interest if she pays the minimum payment? Well, if she pays a full payment, no interest is paid. She is going to end up paying exactly what she was charged. Now, if Miranda were to pay partial payment, let's say she paid $135, it would take her 1 year to pay off the card and she'd have to pay $125 in interest. Here's where it gets interesting. If she decides to only pay the minimum payment, it would take her 11 years to pay off $1,500 and she'd pay almost that much in interest, therefore doubling the amount that she would have to spend in order to make her purchase. So as you can see, even though credit cards are a nice tool, it's always going to be advantageous to try and pay off as much as you possibly can as early as possible. Now, credit cards equal helpful financial management tool, as we mentioned before, but there are also some pitfalls we have to be aware of. But let's take a look at the positives first. Develop a positive credit history, convenient payment tool, protected from unauthorized charges, credit card safer for online shopping, and if you're one of those that does a lot of e-commerce, purchasing through Amazon and other vendors like that, that's going to be a great tool to have. And there's also credit card bonuses and rewards. For example, if you like to travel, you might be able to earn travel rewards or even percentage points back based off of purchases and using the card. Developing a positive credit history is very, very important because that's going to follow you no matter where you go in terms of all types of credit lending that you are seeking. Credit card use can have a positive or negative impact on your credit history. So if you use it well, it's going to increase your credit score. If you do not, it's going to decrease. So if you follow these positive behaviors, you will have a positive impact on your credit history. Pay credit card balances in full every month if possible. Pay credit card bills on time by the time that they're due. Be conscious of how credit cards affect your credit history, and then finally check the monthly credit card statements for errors, comparing to make sure that your records indicate the credit card company's records, and also look to make sure that there aren't any fraudulent charges, maybe if somebody was able to get a hold of your credit card number. Now, the convenient payment tool, if you're going to use it this way, be conscious of all the credit card purchases and do not overspend. It is very, very easy with a credit card to overspend. You are basically spending money you have not earned yet and that can be a trap in itself. So how is a credit card a convenient payment tool? We've kind of covered much of that. It's going to help with purchasing as well as safety with online purchasing, and it's also going to be a very convenient way of purchasing. Now, if you want to protect yourself from unauthorized charges, okay, so this is if you have a card that is lost or stolen, you need to report this immediately. When it comes to this maximum liability, you might have a $50 or a $0, okay? So you might have to pay a liability of $50 if there's unauthorized use. However, $0 if the credit card is lost or stolen, but you report it before any fraudulent activity is recorded. If the credit card number is used fraudulently, but the credit card company itself is not used, you might be able to get away with not having to pay anything for the liability. But nonetheless, normally if you do purchase things using a credit card, or if your credit card account number is stolen, the credit card company has insurances against that and protection for its customers in the case that that were to happen. Always, always check your monthly statements to make sure that the purchases on that statement are yours. All right, let's talk about safer online shopping. What is the difference? Well, more protection against fraud. Credit cards are safer than debit cards. Credit cards can replace your money. Debit cards are using your checkbook money, and that money is gone. It is gone. Less liability for unauthorized credit card charges, whereas also money is not connected to a depository institution account such as your checking account. So credit cards, debit cards, very similar, but not the same as to the way payments are recorded and transacted. All right, so when should you choose debit or credit? A point of sale, which means you are going to purchase something either at a gas station, at a retail store, restaurant, so on and so forth. If you decide to pick credit, the receipt must be signed, usually if it's a purchase over $25, I think it might even be over $50 now. Potential benefit, extra liability protection from fraudulent charges. Whereas if you choose a debit card, you must enter a PIN number to authorize your identification to access the funds. Potential benefit, option to withdraw cash on your depository institution without any fee. So there are advantages to either one of these different types of payment. All right. Additional benefits when it comes to credit cards. Rewards, rewards, rewards. Some of them give airline miles, warranties on items purchased, possibly even travel insurance, and then even cash rebates. So using this as a tool, if you can control your spending using credit cards, can be very advantageous from the aspect of what the credit card can provide the consumer. All right, credit cards, advantages and disadvantages. It is a convenient payment tool. We've gone over that. It is useful for emergencies if you do not have the funds to cover maybe the repair on an automobile, often required to hold a reservation, rent a car, reserve a motel or hotel room, able to purchase big ticket items and spread out the payments because if you have a significant credit limit, protection against fraud, opportunity to establish a positive credit history. Online shopper is safer than using a debit card. Also, possibility of receiving bonuses. Interest can be costly when a balance is revolved. So this is talking about the disadvantages now. Additional penalty fees may apply, tempting to overspend. If not used responsibly, it will have a negative impact on your credit score. Go back to that just in case you didn't get all of those items. So as you can see, it can be an overwhelmingly advantageous credit option for us. We just have to be aware of some of those pitfalls that come along with it. All right, so credit card offers. Let's take a look at some of these that are out there for us to pick from today. Credit card issuers are required to disclose the terms and fees of credit cards in an easy-to-read box format. So let's take a look. It's called the Schumer box. It's just a slang term for it. We're going to take a look at one of these. This is going to be extremely small print, but we'll do our best to be able to look through all of the different aspects of it. So here's an example of terms. So let's take a look at the term. This is what the statement's going to look like, the interest rates and interest charges. Now it's broken up and itemized into different areas. Let's take a look at each one of these. Let's start off first with the APR. The APR, this is the amount that is going to be charged for interest on purchases. That's the very top spot, 12.99, 13.99, or 14.99 for this card. What about interest rate paid for purchases that are not purchases? That didn't make any sense. Let me restate that. APR for purchases is 12.99, 13.99, 14.99. The next one is an APR for balance transfers, moving it over to another card. We'll get to that in just a minute. Final interest rate may depend on credit worthiness of the applicant. All right. Now, an introductory rate is sometimes going to be something that you're going to get for a short amount of time. That is going to then adjust to a different rate once that introductory time period expires. All of that is going to be in the APR purchases section of the terms and agreement. All right. Fixed versus variable rate, you want to take a look at that. A fixed rate will never change, whereas a variable rate may change based off of the prime rate, which is a fluid interest rate that, depending upon the health of the economy, is going to rise and fall. Variable rate is going to be a little bit more tricky because it could go as high as a certain amount, but be as low as a certain amount. You just never know what that APR is going to be. Fixed rate is definitely a more advantageous type of card to get. All right, so let's take a look now. That's what I was getting at earlier, where I kind of jumped the gun and got a little ahead of myself. But APR on balance transfers, that's 15.99% in this case, or cash advances, which is very high, which is why you always want to use your ATM card if you have the ability to do so. Those transfers are going to be very, very minimal compared to what it would be to get a cash advance on a credit card. Fees may apply even if the APR is 0. So you got to be aware of that too, depending upon the card that you're looking at. All right, so let's take a look at penalty APR when it applies. Oops. And that could be in that section there. So in this case, you can see when you're going to be charged a penalty, make a late payment, go over the credit limit, make a payment that is returned, so on and so forth. And every credit card is going to be slightly different. Now, how to avoid paying interest on purchases. All of these things are going to be located in the next section of the statement of the terms and agreement. Also, the minimum interest charge. Typically, it's about 50 cents to $2 a month, but every credit card is going to be slightly different. All right, so you can also do a little bit more research and explore the Federal Reserve Board website, which is indicated here. Go ahead and visit that if you want to look up a little bit more information on credit cards and their features. Let's go into the next section, which is fees. Now, fees, this is a setup and maintenance fee. Sometimes there is a fee to establish the credit account, and there's also a fee to maintain it. Some cards do have an annual fee, others do not. You want to try and avoid this if possible to stay away from the annual fee. Setup fee sometimes can be waived depending upon credit history and credit score. Other times you have to pay it. Participation fee, monthly fee for having the credit card. Additional card fee, which is if you have a second person on the credit card account and issuing a second card. So you can see this is a pretty in-depth description of what this card is going to entail. So think about why a consumer would choose a credit card with an annual fee. Maybe that's the only choice available. Maybe they don't have the credit score to be able to get a card with no annual fee. Benefits such as airline miles the card offers of a greater value to them. Who knows? There are a number of different aspects of it. All right, transaction fees. So transaction fees, depending upon transactions that take place and how the transactions are to take place, balance transfers, cash advances, or foreign transactions could require additional charges. Penalty fees. Penalty fees, we talked about that, the late payment fee, the over the limit fee, the returned payment fee. All of those are laid out in the bottom part of the terms and agreement. Your balance. Credit card companies use one of several methods to calculate the outstanding balance. That is also laid out at the bottom of the rates and agreement. And the loss of introductory APR is also on the very bottom there to conclude the terms and agreement. So if you need to go back and look at any of these slides to get going on those notes, this is going to conclude part 1 on our credit card presentation lecture. And then part 2 is also going to be posted in Classroom. So once you have the notes for this and you're ready to move on, go ahead and view part 2. So we'll stop here and I will see you at I will be talking to you in the part 2 version of the presentation lecture.